And the end of that music means we are ready for another edition of the halftime report. My brother Tim is taking the morning off. I am here to host, joined by my brother Matt doing lead commentary, and then Frank on Friday. We're always joined by Frank Martin for another edition of Frank's Charts. You know, in the spirit of Tim, always start with pleasantries. Matt, how are you doing today?
Oh, man, I'm somewhere within the volatility range of gold after Powell's commentary.
Listen, Matt, inflation is transitory. Oh, wait, he backtracked on that today.
Is that why you're aggressively attaching a tapering timeline and talking about multiple interest rate hikes before 2023 because it's transitory? Huh. Okay, I'll go with it. Yeah, it's transitory if transitory means 3 years.
Frank, I know you don't care about transitory. You are always your inflation is always at 1.7%. Frank, how are you doing today?
I'm doing well. I got a good rant against my Denver Broncos for letting me down yet again in the pre-production show. I needed to get that off my chest, and a fellow Dolphin fan could understand it.
It was a great moment from us. Crying in our
we commiserated a little bit.
It felt misery good. Did find company.
It did, and it felt good. We're another week through earnings. Only one more big week ahead of us. So no complaints on that end. Excited to be here with the team as always. Always fun to come talk charts with the team.
All right, let's get to it. Matt, broad market stalling a little bit at all-time highs here. Break down the charts for us.
Yeah, let's take a look at this. What we're seeing a little bit here is just a continuation technically of what we've been seeing over the last couple days in the marketplace. Very strong move to kind of end last week as we confirmed on that pivot point with the increasing in support. You saw the momentum start to build as we broke out of short-term resistance levels. And then obviously, as you start working your way up into the top end of the chart, you really got to think about two different things in terms of your price projections in the short term from a technical perspective. And the question that I always have, and what Frank will always have as well when it comes to analyzing potential breakouts, and that will help you understand where the momentum is in the market right now, is the distance the market is running going into that breakout. And when you see a marketplace over the last week and a half that has had a very, very, very good short-term run, as it did confirm that pivot point on October 13th. You see the nice run up back up into the resistance levels. Man, that market, the market participants, and I give this analogy a lot when it comes to breakouts. You got to ask yourself a question. How far can it run before it truly does get tired in terms of the market participants, the overall price action, before you see some degree of consolidation? And I always say, Chucky, if you were to go outside and you were going to run a mile as fast as you can, because the market's been running a mile in the last week and a half. Chucky, if you were going to run that mile as fast as you can, what would you do after you ran that mile?
I ran under a 5-minute mile once. I don't think
that was when you were 19 years old. You are not 19.
I was 18.
That Mark would run a mile in the
actually,
first
I was 16.
He was an amazing distance runner when he was young. There's no doubt about that.
But no, listen, you take a break.
Take a break, right?
Spent all your energy. You're like, you gave it your all, and you're like, and it's not that you can't run an hour from now, but boy, you need to take a break.
Listen, some people put their hands above their heads. Some people put their hands on their knees. I think Mark would lay down and take a nap. Sometimes the market has to do that. It has to take a little bit of a breather. It has to take a little bit of a break. It has to reset the technical condition before you see different triggers again. And so I do see this as a little bit of slowing momentum, nothing to be too concerning about. The market has actually behaved a little bit better than I would personally have anticipated if you would have given me the earnings results ahead of time, quite frankly. I've been actually fairly impressed with the market's resiliency in the face of some of the guidance concern, not the raw numbers, but some of the guidance concerns I'm seeing out of certain companies for the fourth quarter. And yet the market has behaved fairly aggressively, coming off the lows, but now that's a week and a half ago. Now we're sitting at resistance. You're looking at where is this next catalyst to propel the market moving forward. And you take a look at crude oil here just for a second. A lot of times when you get overextended, you see a little short-term consolidation. You get overextended, you see a little short-term consolidation. And we said this a couple days ago on crude. This allows the intraday charts to really solidify themselves so that you can start identifying where that next trigger point is from that next swing trade, that next leg up. And so when you're looking at the market here, the S&P 500, you certainly got to have a read that is slightly overextended as it comes into this major resistance level. It would not be too surprising in any capacity to see a little bit of consolidation, and especially when you're talking about, Frank, we're now week 3 going into earnings next week, right? First week we got 20 financial companies, but that's pretty much the only thing we have. This week we have 55, 56 S&P 500 companies and some really big names this week. We're going to talk a little bit about American Express. We talked about Tesla this week, but next week, guys, oh man, just let me read you this, just the market cap, top 5 market cap companies for next week: Apple, Microsoft, Google, Amazon, Facebook. That is the S&P. And so next week, you got 156 S&P 500 components. You got the big dogs reporting next week. You're at the top end of the charts in the short term. Wouldn't it be surprising to see a little consolidation as we head into some of those major earnings reports coming out next week? But as of right now, long-winded way to answer, we're slightly overextended. Expect a little bit of momentum shifts as we navigate this all-time high breakout.
Matt, does it work? Do you ever think that this has just been a different version of the run-up to earnings? Because we've seen so many times in the last 5 quarters this run-up. Now, it was usually a couple weeks before, very steady. Does it cross your mind?
I think there's
that
a couple things.
A boost.
Number one, I do think the market was in a buy mode coming into earnings season. Because you're coming in off the lows, you've dealt with some volatility in September. This is not abnormal for the market, guys. There's a reason we look towards November for Santa coming to town. That reason is typically you go through some volatility in September and October, but then earnings season comes out. It typically provides a little bit of a bullish catalyst for the market moving into a very important seasonality. And so I certainly do believe earnings has been a catalyst, but I wouldn't say it's the build up into earnings. I'm seeing the earnings as a catalyst postscript to a certain extent, where you have the earnings come out and it's building a mentality. But it's not just earnings for me right now. You also have other things that are occurring out there. For example, from a political perspective, it does look like at this point that the Democrats are going to get somewhere around that $1.75 to $2 trillion mark from a social infrastructure perspective. That also means that the market, which has widely been anticipating the traditional infrastructure plan, the $1.2 trillion plan, that gets solved as well. And on the backs, one of the biggest concerns and one of the biggest catalysts for the market in the last 5 years was the Trump tax plan from 2017. Biden, one of his campaign promises was to bring the corporate tax plan back to pre-Trump, which was 28%. Currently, it's at 21% from a corporate tax plan. That looks like it's at this point going to get shelved as well. In that $2 trillion social infrastructure plan, the $1.2 trillion one. So it looks like the market's getting a little bit of, hey, we got our cake, let's eat it too, with the additional stimulus anticipated that's going to be coming into the market, plus taxes which stay at a low point. My question is, Dams, how are you going to pay for it? But again, they deal in Washington, we deal in reality.
Just on a note of that, Kristen Sinema, Democratic senator from Arizona said that she will not support tax increases on corporations, wealthy individuals, or capital gains, which puts them at least one vote short on any tax increase.
I'd like to wait to hear from the parliamentarian regarding how they're going to pay for the $2 trillion and the $1.2 trillion without taxes. But again, I guess that's for another day. As for today, we did get that news that it does look like Democrats have the support, the 50 votes necessary in that 1.75 to 2 trillion. Still some negotiation going on. So again, to come back to the earnings being a catalyst, it certainly has. But some of those dark clouds, remember those dark clouds we were talking about in September. Well, is the Democrats going to get along long enough to get some of these Democratic wish list items done? Well, that was a concern. That concern seems to be dissipating a little bit. Evergrande was a massive, massive dark cloud. Well, over time, they're making a couple payments here and a couple payments there, and people stop talking about it, quite frankly. That seems to be dissipating a little bit in the short term as well. And so as you remove some of the concerns from the market, you're going to see a market that appreciates a little bit. But I don't feel we're out of the woods yet there. I don't think we have clear skies there yet. You're just seeing a little bit of positive catalyst moving in that direction, and the market is pricing that in as they start to navigate this resistance channel.
S&P doing that thing on tech, NASDAQ underperforming. We go to the tech chart, whatever the causal reason, a little bit of underperformance compared to the other market. Pattern a little bit different, but there's a lot of similarities to the pattern as well. Break down the chart.
I think you do have a lot of similarities. Right now, the NASDAQ is underperforming a little bit. A lot of that is tied to Snapchat and obviously the volatility that ensued post-Snapchat earnings. You saw that impact some of the other tech space. You saw it big time impact in communications, because obviously communications is where Snapchat kind of lives. But again, comms and tech, they are a little bit of a cousin type scenario from a sector perspective. So you're seeing a little bit of that today. I'll talk about Snapchat, what happened in Snapchat earnings report here in just a little bit. But from a technical perspective, again, I think you got to appreciate the resiliency of the NASDAQ over the last week and a half. It was underperforming the S&P the last week and a half. It's played a little bit of catch up. And when you're looking at the pattern here, I got these very similar in terms of patterns. And I've said this all week. When the market starts shifting directions, everything moves in line with one another, and then you start seeing separation. Well, right now you see almost everything moving in line with one another. Well, we start separating ourselves as we get through next week's earnings reports. Right now, I got the NASDAQ at a high base with resistance right there, about 15,500. I got the S&P at a high base kissing against the all-time high.
Frank, you're a short-term trader. You're always breaking down charts. Remove ticker symbol from chart. What does tech look like here?
It looks fine to me. Just to kind of springboard off of it. I mean, it really is the weakness in comms. It's more of a pause day, broadly speaking, I think, within that index. At this point in time, nothing would have changed my original vision kind of from, last week, where if we broke through that trend line, if we broke through that 50-day moving average, we're working to those all-time highs, just slower than the S&P. I don't think it's any different than the S&P personally. It's just slower. And sometimes somebody's got to be the fastest one in the room, right? So I wouldn't read too much into this technically. I don't think today has really done much to change that from a daily perspective.
And can we break down the intraday charts, man? You'd always do such a masterful job, both the S&P and NASDAQ, just to see if there's any. What you're seeing on that intraday chart.
Well, intraday, I think you are starting to see, and let's come back to the broad market very quickly. S&P 500 here. Intraday, you're seeing some volatility shifts today, but I kind of don't mind it, honestly, and we will give nice Jay Powell a little bit of a pat on the back for that lack of breakout there. And the reason I say that is I would not mind another couple of days of consolidation before we get into Apple's report next week. I think that would really set up number one. I don't want fake outs occurring on Fridays. That's number one. And then you have Apple reporting fairly early next week. Number two, I think the consolidation coming into some of those big time names next week makes a little bit of sense here. taking the market, having the market take a little bit of a breather after some really good price appreciation in the short term would reset some of those technical triggers. I think that, I know it would reset some of those technical triggers. And so what happened here today, you had a nice consistent market here. Here's the cash open. Cash open got gobbled up yet again, and you're threatening that breakout there. What happened? Well, Jay Powell was given a speech is what happened. And Jay Powell basically said to the Bank of International Settlements is that he said that basically what he did is he confirmed the timeline regarding tapering. It does look like tapering is going to occur starting in November or December. Don't know exactly what month that's going to occur yet, but the end result of tapering is where we thought it would be. The second quarter, at the end of the second quarter of 2022 is the ending of the tapering, which means they got to start at the latest December if they want to do a $20 billion type market reduction tapering plan. That does make some sense to me. If they're going to do a 6-month time frame, you start in December, you get done in June, then you start thinking about liftoff. Now, what's happening though, and why the market's, I don't even want to say it's puking up a little bit intraday because that's not my read, but why the market is coming down a little bit is you are starting to see the futures pricing start to increase regarding interest rate hikes. You're now looking at a 70% chance of an increase in the interest rate starting in the third quarter of next year. Multiple rate hikes may occur in that time frame, and so the market is starting to behave like that tapering timeline at the end of June is the beginning point of liftoff from an interest rate perspective. And so there's just a little bit of that concern building. I think the market has a misread on that. I do not believe the end of tapering is the immediate beginning of liftoff. And the only thing the market has to do for Jay Powell to shift, because he shifts like the wind of Emory County, Utah, is to go down 5%. And I promise you, Jay Powell will capitulate to that. So no, I'm personally not there yet. I'm just giving what the market read is regarding what Jay Powell said today.
No, and so, basically did he say anything different than what he did at his FOMC press conference?
No, he reiterated. So he didn't add anything new. He basically confirmed the timeline for tapering. He was also very quick to mention that tapering is not liftoff. The market is interpreting as at the end of tapering could be liftoff. You're seeing the futures pricing increase or probability increase on that happening at the CME group. Again, I'm not there yet. I think this market's a high base. It's been very consistent technically, and just some nonsensical behavior to the market on an intraday level perspective on a Friday in front of some major earnings. I just think this is a little bit of Friday.
And right at resistance to boot, yeah, right? I mean, who wants to be the guy or gal buying right there with all of that at resistance on a Friday after a great run into the big week of earnings? Give me a doji. Heck, give me like a week of dojis. That would be great.
You give a few more days of consolidation. You get an Apple report, which, you know what, Apple had a little bit of responsibility. What happened with Snapchat, Twitter, and Facebook today? Maybe that's their benefit. We'll have to wait and see for that. But
and one thing I've learned from Tim in making a transition is to insert my snarky commentary, not allow you to comment on it, and then transition to the next. So in Tim's honor, I will say it's going to be interesting if market participants buy the tapering is not tightening, or if they do a little sell-off before. Now let's look at IBM.
Which certainly makes me want to respond.
Now let's look at small caps before we move on to commodities. Just stuck in a range, it looks like, on small caps right now.
Yeah, fighting against the 2300 breakout here. It's a story as old as time at this point with the Russell 2000. Everybody understands 2300 to 2360. Mm-hmm. A breakout, it will most likely see a 60-point price appreciation. I think day traders are looking at that. Quick swing traders are looking at that. But the investor class, they're like 2,300? No. We're looking at 2,360. Let's break that top end of that channel. I think the position traders are saying the exact same thing, mind you. And the cash flow traders, which have dominated this space for months and months and months, are laughing at any technician thinking 2,300 is going to mean anything.
Indeed, indeed. Will you give me just one last look?
That was my subtle jab
We gave
the
me
Russell.
one last look at ARK before we transition into
Sure.
commodities, ARKK, because the volatility
Hey,
stocks.
I accidentally put on ARCC, and I kind of like that high base riding the lightning there. Just sometimes
The volatility
it just works out that
stocks
way.
have, in this run up recently, volatility stocks have just, Kathy Wood, a lot of volatilities have good runs, selling off a little bit today, underperforming the market. Do you see anything in the chart here, Frank?
This one is one of those where I could easily see kind of wanting to buy it in this range, but there's just lots of challenges. The 200, you break that, you got 126.50. That's probably, an interesting price point. Then you've got 128, then you've got 132. I hate charts like this.
I hate V-shape.
It's not even the V-shape. It's just there's a million things that every time I try to prep a trade, it's like, well, what if this acts as resistance? What if this acts as resistance? I shy away from charts that look like this until there is a bit more clarity. I do kind of like the chances of it springing off this 9 into that 200, but for a swing trade, that seems like it would be pretty, difficult to pull off. That'd be more of an intraday watch, I think.
What do you think, Matty?
V-shaped recoveries are difficult to trade because the resetting of the pattern is fairly quick. And so day traders live in those environments, aggressive swing traders live in those environments. When I talk about Bitcoin recently, and in fact, I think Bitcoin's kind of setting up more of a traditional swing trade setup, but recently I called Bitcoin a day trader or an aggressive swing trader type mentality, because that's my mentality when it comes to V-shaped type of recoveries here. And ARK is certainly trying its best to form a V-shaped recovery. And when you're looking at those V-shaped recoveries, it really is a matter of, and the key is not necessarily resistance, although I'm just like Frank. I look left of the chart and I get a little sick as well, Frank. Like I just think there's
so
too much there,
it opens
right?
up so much on the break of 130. That's where I'd put this guy.
And it does. But again, there's some distance between 120 and 130, sure, right? And so I think when you're looking at V-shaped recoveries, what you really got to kind of look for is those quick resets of support levels. And you see one right here. You see that quick reset of support, pop, 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 quick drop, come into support, form a little bit of a head and shoulders, and then it blasts off. You see that nice little blast off move. Then you see it kind of establish itself as a high base here, kissing against 117.5. You see it drill the 9 EMA for the first time in a week, held that 9 EMA, pounded back up. And so you're really looking at the high base. And if you're looking at a trigger on a trade, it would be the high base break of 120 and you're driving it to 123. The question I have though is, isn't there a little better trades out there?
Yeah.
From if you're looking at a $3 window that are a little cleaner. I can find trades that have a $30 price with a $3 window that you don't have to deal with the volatility you're dealing with right now in ARK. So I see it, Mark, but again, I just kind of feel in a world where you're talking about the market at an all-time high and you got some really clean charts and some trends developing. Let me put it like this. If somebody were to bring up ARK as a trade for the scout report meeting, it would be vetoed within a heartbeat.
I think blue chips over volatility right now myself as well.
Well, and not only that, Chucky, but we'll get into some sectors here in a second. You're seeing some interesting things from a basic materials perspective. Look at Cleveland Cliffs today. We'll talk about their earnings here in a minute. You're seeing some interesting things in healthcare right now as well. You're going to see upgrades in the more the defensive areas of the market. Real estate, for example, has had a couple earnings reports come out this week, and you've seen the sector start to fly and start to behave a little bit more aggressively. I just think in a world that when the market is solidifying itself, why mess with something that is in the middle of a wide range of 110 to 130?
Yeah, no, I mean, the defensive sectors, spotty market on the sectors, break down some of your favorite sectors, because those defensive areas, one of the things, Matt, that in that uptrend, and we talked about it until about 5-6 weeks ago, it seemed like there was a take turn market, right? An area of the market would have a few days and then another area, and the cumulative effect was the gradual lifting of the market itself. and when I go to different areas of the market, I mean, those defensive areas that have been got brutalized over the last month, they've shown some life recently. What are you seeing in the sectors?
On Friday, my routine's very simple. I always do my personal sector rankings kind of before I get into the halftime report. Then Frank and I immediately following the halftime report will basically solidify our rankings because we talk a lot about it during the halftime report and whatnot. And then we'll do a readjustment when the market does in fact close, because that close can be very, very important, especially if you're threatening a breakout or you're threatening a breakdown of some variety. I feel like this market this week was just a little bit of a catch up to the price movements we've been seeing over the last couple weeks in the market. When you generalize the three categories of sectors as growth, cyclical, and defensive, and when you're looking at the aggressive sectors, you're seeing some real separation here, some real separation from technology and discretionary and comms. Discretionary and technology both behaving more in terms of a traditional short-term bullish environment. When you're looking at discretionary, obviously the breakout from last week, really positive type price movement. You had Tesla report this week, which was a pretty decent report coming out of Tesla. You got this as a momentum build type in discretionary. And once again, the discretionary sector showing you don't bet against the American consumer here. The American consumer coming in very, very, very strong. Discretionary doing very good, very consistent. Again, see a trade, you take a trade type philosophy. And again, that philosophy, at least for me, it's you don't have those overlapping concerns that, oh my goodness, geopolitically this might happen, politically that might happen, this economic report might stop. What if OPEC? These irrational at time things we say to ourselves to stop action. You see a trade, you take a trade right now in discretionary. Technology.
Great way to put it. That is a great way to put it. You see a trade, you take it.
I like that. Thank you, Frankie. When you're looking at technology, I think there is a little bit of concern as we navigate this major resistance at 160. Obviously, you got some big dogs next week called Apple, Microsoft reporting, and a bevy of other companies reporting as well. So I do think you're a little bit of hesitation mode with technology, but again, you got to respect and you got to appreciate the price movements over the last week and a half as technology has came back in line with the S&P 500. That 160 breakout, 4 days of consolidation at the top end of the range, waiting on a little bit of Apple. But that 160 breakout could be legitimate here on a multiple time frame perspective. And what I mean by that, guys, is when you're looking at a high base here on the daily chart with a momentum build, you're coming into a major resistance level at 160. You put that on a weekly chart and you're looking at that. Man, it gets clean on top of 160 real fast there. So keep an eye on tech, but it could be coupled with a little bit of Microsoft and Apple next week. And then the problem child when you're talking about this space, and it has been for a while, last week it was ranked right there at 40, the week before 45, is communications. And communications showing you its teeth here today. But again, comms never confirmed a reversal here. It was within those ranges, never got back above the 50-day moving average, never really broke out of a previous pivot. Comms comes down and Snapchat, all the blame is being placed on Snapchat here, and rightly so. Snapchat missed on their earnings report. They lowered their guidance. These are things they have warned about, but we'll get into that here in a second. But man, you saw some quick price movements in when it comes to Facebook. When it comes to Twitter, you're seeing the price movement come down. And I do think you're staring at a downgrade in the face of Twitter and Facebook reporting next week, but you can't enjoy that type of price movement on Snapchat unless was watching Trade Masters last Wednesday. And Tim's like, nope, inverted fly here, guys. I'm expecting volatility. By the way, great call on that by
sure.
Coach Tim on the Snapchat
Absolutely.
earnings play. But again, you're seeing the concern start to build in Facebook, Twitter. You're seeing not a little bit, but a tremendous amount of concern regarding guidance in Snapchat. So comms got to be looking at a little bit of a downgrade here.
To kind of springboard off that, Maddie, while those are the big, names and the big, market cap percentages in there, I mean, you got Verizon and AT&T just stinking the place up. Comcast, Charter, bearish retracements. I mean, Disney breaking down,
Yeah.
Netflix, hey, beautiful. But I mean, it is, I've brought this up a few times. I've been shying away from this area for a
Could you
while.
imagine what the
And
sector would look like if it was not for Netflix?
boy, I mean, it's rough when Netflix
Like
and the video
I'm
game
serious,
stocks
guys. It
are
would be
leading
ugly.
the way. Yeah, it's a stay away area for me right now. And when you have so many other options, don't try to get too clever. I'm right there with you. I think
Yeah.
it's an easy downgrade as well.
I do too. I mean, this price action today, it's leading the market down, underperforming. Snapchat's getting destroyed. I agree, it's an easy downgrade. When you're looking at the cyclical areas, Chucky, you're talking energy, basic material, industrial, and finance. You're seeing a lot of stabilization in the cyclical areas of the market. When you're taking a look at energy here, little bit of a high base, testing the 9 EMA, pattern change here in the energy space though. And a couple things, and again, not trying to throw cold water on anything. Love the energy space. Been talking about it all day long, every day for the last month and a half at Taco Trading. But again, you are seeing a little bit of momentum pattern shift here as you're approaching some very important earnings. And just this week, we haven't exactly seen earnings be great for this space, right? We talked about Kinder Morgan yesterday, KMI. See a little gap down, trying to stabilize. By the way, I kind of like Kinder Morgan post earnings.
Yeah, I could see why you do.
Yeah.
Needs maybe a little time, but yeah.
That needs time, but again, it's starting to find it. But again,
Mhm.
you're seeing this. You're seeing on Schlumberger today. You're seeing a little bit of gap down, stabilize here. So you haven't really seen any in the energy space. You haven't seen that earnings report come out yet. And again, we're very, very early in earnings on energy, but you haven't seen that pop on anything yet in the energy space. You've seen that in discretionary. You've seen it a little bit in tech, not Intel. You've seen it in other spaces. You've seen it in healthcare. You've seen it in finance. You haven't seen it in energy yet. And so it just a little bit of slowing momentum, some pattern shift is occurring. But Frankie, I don't think for me it's enough to downgrade at all. In fact, I just kind of feel this is a high base waiting to break out again. What's your read here?
Yeah, I think this is an easy maintenance mode for me. There is a bit of slowing momentum, and that could be at least a little bit of a short-term concern. I think you're still looking to buy quality setups.
Me too.
And it might be, we might need to take a break. I mean, let's not forget. I mean, we basically went straight up for the better part of a month in energy, right?
Mhm.
So, I mean, how surprised
Like
can we be?
12% skyrocketing.
Yeah, I mean, are we
It's
going to
been
complain
amazing.
too much about that? The turn, if we do end up falling below that 9 EMA and closing below that, that would kind of shift me into more traditional, break it or retracement type of watching for within the space. But I still think you're looking for them from buying opportunities. And hey, if we can take out this weekly high, that would confirm that break. And so I
Well,
think you're fine here personally.
and honestly, Frankie, even if you do violate the 9 EMA, which has been strong for the energy space recently,
100%.
I think you're looking at dip mechanics. I
It,
don't
it,
think it's a stay away. I think you're
No, you're
actually
looking
looking
for
for
the.
dip
I
mechanics.
I absolutely agree. It just might be a few days into the later part of next week or even the week after if
Yeah.
that's the route it goes. But yeah, I'm with you there
Agreed.
completely.
Agreed. It's a maintenance for me as well as it navigates the high base. When you're looking at his cousin in the material space, I do think you're looking at the reversal solidifying itself. It's working its way back up. Gold has started to solidify itself. Although Jay Powell had some negative comments, he must not have liked anybody. The Fed buying gold above 1800. He
He
just
did
must.
not like it, did he?
He's like, I gave you guys new rules, and all of a sudden you're trying to trade gold above 1800. No, we're gonna say some commentary. I kid. But no,
I don't know. I looked at Jay Powell's portfolio. Listen, all those shifty
come on,
bastards out there and their thing. They didn't hold any gold, right? They owned a lot of stock.
Oh,
Started selling it at.
listen. Hold on. Let's be clear on one thing.
Yeah.
They don't hold any gold stocks because they hold the gold.
Jay Powell's basement
I
is like
just wanted
his
to
Jay
make
Powell's
sure
man
that
cave
was
is like
clear.
Goldfinger. You know?
Yeah. Jay Powell's floor is minted in gold. He has all the gold. No, I can't. No, that's actually serious. I'm dead serious on that one. But no, you are seeing a little bit of stability at the top of the chart, fade action. We haven't really seen a test of the 9 here. Look at Cleveland Cliffs here today. Still companies starting to solidify themselves as well. It's really a matter of those specialty chemical companies really coming in line as well, still a little bit volatile. But the space itself is building a little bit of confidence, in my opinion. And especially those areas of the market like steel, the metal miners, gold, some of those areas of basic materials, those charts that are coming off the lows they have some value to them. And so I do think it is solidifying itself in the basic material space. Frankie, this is an upgrade for me. I like the consistency build here. So I'm a 5-point upgrade here as the space continually gets a little bit better and better day after day.
I have nothing to add. I'm absolutely in agreement there. I like the movement. I like the participation that we're seeing, throughout the different industries within the space. I like that chart. I like that we've been just keeping on as we work to that next resistance level. This one is absolutely an upgrade for me as well. Just a 5, nothing crazy.
Yeah, just nothing crazy. And that's what I kind of feel a lot is just the market's just a continual 5-point upgrade as the market is solidifying its short-term trend. Because again, we're coming out of reversal analysis, correct? Where the entire market is coming out of reversal analysis. And so as that short-term trend builds in consistency, as the pivots start building in consistency, your confidence starts building.
Yep.
The trend doesn't really change. The trend is just the trend. But the consistency of the pattern starts to really solidify itself. And so I think that's what you're staring at a lot in these sectors is 5-point upgrades. Same thing. So a little bit of stabilization in energy, looking at a 5-point upgrade in basic materials. Last two sectors, same thing. Frank, whatever we just said on materials, can we just repeat that on industrials?
The only thing I would say differently is we are approaching some major resistance. So I probably will personally not be upgrading it simply due to the fact that we've got all of that 106 resistance that's been resistance for all year, right?
Yes.
And so if that wasn't there, it would be an easy yes. Because that's there, I'm going to play a little bit more on the side of caution. I'll probably maintain this as we navigate that resistance level.
And that's always a debate that we have.
It is.
Right?
Yeah, we have lots of debates on that.
Well, on materials, like when you take a look at materials very quickly, Frank's talking about the previous resistance on industrials. Well, that previous resistance on materials is still another $1.50, $2 in front of it. So it still has a little bit of price appreciation before you start to get into that. Well, we're expecting a little bit of consolidation. I think you could anticipate some consolidation here. Yeah, the industrial sector has had very strong movements this week. It's had a very strong pivot point off the 200-day moving average. I do feel like you're slightly overextended as you come into major resistance. It's a 5-point upgrade based on momentum for me. But I am certainly in agreement with Frank that it is at resistance. You are slightly overextended as you come into resistance from a price action perspective. And as we've discussed in the S&P over the last 2.5 trading days, when you come into resistance and you have a slight overextended scenario coming into resistance, it is not shocking, not surprising, and maybe expected to see some consolidation there. So you're not going to get a major fight from me on that one, but I am a 5-point upgrade here.
Yeah. And it's a good thing if we do get that little breather, right? Because that helps really line up those charts.
Can I paint a picture?
You can. You absolutely can.
High base, 90 MA catches up. We blast through 105.5.
Absolutely. This is one of those charts where it's maintenance for me. And as soon as it breaks that resistance, it'll be a 10-point upgrade. So, that's what this chart is to me. It's like, I'm going to, be cautious here, but I'll really be opening up that risk graph if we take out that resistance level a little bit more aggressively than I typically. I'm usually a 5-point upgrade type of a dude.
There are so many nice setups developing in industrials that if you can get some top-down sector, just take a breather, break out. Boy, there's a lot of nice setups in industrials occurring right now.
Well, and again, we haven't talked, we as market participants, we haven't talked much about the $1.2 trillion infrastructure plan because everybody's been talking about how the Democrats don't get along right now on the human infrastructure plan. But again, it's still $1.2 trillion in traditional infrastructure money coming into the market. That's obviously going to be a tailwind for the industrial sector.
No, absolutely.
Yeah.
Let's shift over to commodities before we get
very
into
quickly, very quickly on the defensive sectors, because I don't listen. Typically, Mark, if you were just to skip over utilities, real estate, and staples, I'd be like, I'm good.
Let's do it. I'm good. I'm here for it.
Like, I'm okay.
It's been a good week for
but
the
I
defensive
don't
areas.
think this week.
No, Tim is texting me right now. He says you're not moving at a fast enough pace.
Yeah,
you're behind schedule already. Move it.
This is true. But I still have earnings to do. But very quickly, I do think we need to look at these sectors, because when you're looking at the defensive areas of the market, we've talked a lot this week about tech, the S&P. We've talked about the Russell 2000, but probably some of the better charts are actually solidifying themselves in the defensive areas of the market. Let's first start with healthcare. We've been talking about healthcare all week long. We've been navigating their earnings reports all week long. It started with Johnson & Johnson with the report coming in on Tuesday. We broke out of the W formation, confirming 125. And I love the behavior of this sector from a technical perspective with a lot of the earnings, the major earnings. We got one, I think it's HCA today. I want to say, yeah, HCA today. And today, guys, I analyzed probably 20 earnings reports this morning. I'll probably rapid fire about 8 of them. There's a lot of lowered guidance, little mix and match revenue, EPS beats and misses. Not healthcare. Healthcare
has been
beat on EPS, beat on revenue, increased guidance. And those were what I've been seeing this week from an earnings. Earnings have been positive for healthcare. Price response have been positive. Technically, you're seeing a sector that is behaving technically like it should behave. The breakout was legitimate. You had 2 days of straight momentum of following the breakout. Then you had 2 days of consolidation as you navigate the next resistance level. That's textbook for me technically. I'd like this sector from a fundamental perspective. It is solidifying itself post earnings. The W formation was confirmed. Technically, it's behaving consistently. The issue, and the only issue I see right now, is you're slightly overextended following earnings as you navigate some major recovery analysis. And that starts at 132, right where that 50-day moving average is. I think that's the level we need to track here moving forward. The past has been consistent. The W was confirmed. We're through earnings for, now we still got a lot of healthcare stocks. Healthcare is a major S&P 500 component, but we had a bevy of them this week too. Got through them. Now we're fighting a resistance, slightly overextended, but I do think you're looking, at least for me, I'm a 10-point upgrade here in the healthcare space. It's my biggest upgrade from for the week.
Yeah, I'm right there. 10 spot very easily. Interested to see if we get a little pinch develop here, Mark, where we got that 50 on top of it. Got
that 9 coming.
Get that pushing us through there after a few days of consolidation would be nice. Yeah, this will be probably a 10 for me, but in my heart, I almost want to say 15 if we break above the 50. So listen, I do really like what's happening here.
I would still be a 10 because you're overextended, but yes. I certainly do appreciate your comment. You're seeing some momentum start to build here. And I said it on Johnson & Johnson when I looked at the earnings numbers. I said, literally in the halftime report, I said, guys, these earnings numbers don't justify this price response. The market is showing you their thirst for this right now. They're showing you there is demand here coming off the lows, because if Johnson & Johnson was at the highs and they gave that report, we're talking Snapchat type response. That's not what we saw. It was coming off the lows. Market showed its appetite. You're really seeing a little bit of demand start to build here. I do think you got to appreciate now, again, 10-point upgrade moves from neutrality into that 35, slightly bullish. We got to navigate some resistance levels. But again, I do think it's positive moving forward for healthcare.
No, and the nice thing, the thing I love about trading the XLs is the volatility is so low. I can go out if I get a nice setup, and that setup that you described, Frank, would be beautiful. Nice breather, allow moving average to catch up, break out. Man, it's rocking 15% volatility. I can go out to 2023 and pick up an option pretty cheap to play a position trade.
They're very mellow tradable instruments as a general rule.
That is probably why Jay Powell said he couldn't trade individual securities and just ETFs.
Yeah, I mean, listen, volatility is low. Like, you got to take advantage. And 15%.
How many shots on Powell do I get today?
As many as you want.
That guy's a scumbag. You get as many ones as
I just say, okay, you guys can't trade, you can't buy Apple, but we'll let you buy proxies that hold Apple. We'll let that go.
Indeed. All right, nice sector roundup. Yeah. Let's flash through commodities real quick. The questions I'm getting the most this morning about Bitcoin, Matt. What's the chart look like on Bitcoin?
I feel like the chart is forming a traditional bull flag, a traditional bull retracement. There's been a tremendous amount of momentum, which can I just show you where support could form?
And that's what I think the number one question among short-term traders is right now.
Okay. I'm not sure the short-term trader is going to appreciate what I'm just about to do. So let's go and let's draw some. It's not, my ticker's not, there we go. It can form anywhere from the current price all the way down to 50,000 is where it could form. Nobody's going to like that chart, are they?
No.
But that's what they get when you have a commodity go up 33% in one wave. Retracements can be volatile. Mm-hmm. Volatility lives both up and down.
What does the earliest signal look like? What does the earliest pattern look like?
Mark wants a buy. He wants a buy so bad on this. He wants me to look at them and be like, this is a buy.
Oh, no, I'm asking for a friend.
Yeah, I'm sure you are. What the earliest this could look like is stabilization at around 60K, between 60 and 62. Seeing the market, seeing this type of volatility settle down, consolidate in that 60 to 62 range. You got an old resistance pivot at 62. Obviously 60 is support. You see the slowing momentum around 60 to 62, and you pound the table on the breakout of 62. That's the earliest. That's the aggressive style that you're probably looking for. But again, it would start with a double bottom around 60K, starting to solidify the intraday between 60, right around that 62K mark, and then looking at the breakout again 62. That's not today though.
No, I think you're probably at least, bare minimum one inside bar, right?
Yeah, it's like it's got
an inside bar, and then hey, listen, beyond after one inside bar. Upward movement, I think we could talk, but I think you need at least one inside bar here before you get too excited.
Well, and again, remember, when it comes to retracement analysis, you're looking at the 9 EMA first. To make it simple, Mark, you're looking at the 9 EMA first, right? That's your first test. And the 9 EMA is that momentum test, right? It's that you have momentum to the top side. Well, do those buyers support any dip here? That's that momentum test on the 9. You're getting that right now. If that holds, you have a very good trade setup that I just discussed with stabilization between 60 and 62. You trade it intraday from that perspective. If you're looking more of a traditional retracement, that number is anywhere between 60 and 55 because you're looking at that 20-day moving average, and that 20-day moving average is right there south of 55 right now. It's going to catch up pretty aggressively over time. So any dip most likely gets gobbled up somewhere between 55 and 57 as we start to navigate the chop against the old high base, which is the top of the base of 58 and the bottom of the base is 55. And so if 60K and the 9 EMA doesn't hold, this is the major zone you're looking at. As a short-term trader, you're looking at this zone to hold. Anything deeper, in my opinion, than 55 is going to show a little bit too much weakness against the momentum of the previous trend. Now, the question I have for you, gentlemen, is this, and it comes from our Tap Train Discord channel. I was kind of been over there quite a bit recently, and I'm going to be over there more, even more in the future. But I saw a question on Bitcoin regarding the ETFs on Bitcoin, and there's now a couple ETFs out there. One was BITO. Okay, obviously you're seeing the same type of downward movement in price on BITO. And the other one that just barely came out was BTF, which is all you're seeing is a big red candle because Bitcoin's down today. The question I have for you guys is this, and we talked about it on Monday or Tuesday in the halftime report as well, are these two ETFs, are they proxies for you guys?
I haven't broken down Valkyrie's new ETF. Bitto absolutely is. I think you're going to see strong correlation. It adds to a list. And in fact, I am currently writing a newsletter for the Tackle for Trading Justice podcast.
Nice.
It'll be on tradingjustice.com that talks about Bitcoin proxies. Will be released this weekend or on the latest Monday. Talks about different Bitcoin proxies, ways to play. You can go from Bitcoin futures to the micros to all of the different proxies. You got a lot. You got you don't have a shortage of choice in how to play Bitcoin right now.
No, and what I said on Monday, Mark, is I see this differently than a traditional IPO, where you don't have market evidence, you don't have a historical behavior pattern, you don't have anything to go on with how the market is going to behave over this tradable instrument, right? And so you want to give it a little bit of time so that you can see how the market performs at different levels. You want to see some moving averages. You want to see how algorithms treat the consistency of technical analysis and so on and so forth. Here on these Bitcoin proxies, though, these are futures tradable. These are based on futures. Yes. And so the underlying instrument is the analysis. It's not necessarily the technical analysis on BTF or BITO or anything else. It's all on BTC. And when you look at BITO, for example, BITO here, when you look at BITO, we got 4 trading days here. We got big green, big red, red. Pretty easy to spot, right? Up, down, down. Okay. Yep. Well, if I went to Bitcoin here, guys, and I went to those exact same 4 candles, up, down, down, like it's the same thing. And so like traders will have confidence on new ETFs that are futures driven because they know the underlying commodity is the analysis. Yep. For example, we've rarely analyzed GLD. We rarely analyze the technicals of SLV. We never analyze USO. Why? It's not because those aren't the tradable instruments. Obviously, those are tradable instruments. It's because the analysis is actually done on the futures/GC, the futures/SI, the futures/CL. And so when it comes to the Bitcoin ETFs, I feel these proxies, as long as they have the liquidity, and they do, as long as they have the liquidity necessary to do what you need to do as a trader, you're perfectly fine, because the actual analysis goes back to 2018 when the futures was adopted in Bitcoin. And so I just wanted to bring that up here today, because we are going to see more and more Bitcoin proxies. I personally am really looking forward to your newsletter, Mark, because it can get a little confusing. Absolutely. It can get a little confusing. So
no, and liquidity is not an issue. Like the new one, BTF, first day trading, right?
Yeah.
Already has an option chain.
Yeah. Not surprised.
Not surprised.
And not already surprised. Has an option chain, not A+, but those aren't bad for something that's been out one day. Those
they are. The bid-ask spreads aren't terrible.
Yeah, they're not terrible for them, especially for one day. And you're going to see, that volume and that, pick up. But already has an option chain.
What it doesn't have is BITO's option chain.
Yeah, give it a few days.
Give it a few days. It's true. But it is impressive to see that amount of liquidity, especially in the options chain on the ProShares one.
Yes.
It is very impressive to see that amount of liquidity, and it's got to warm the hearts of all option traders to know that they can get in and out, protect cash flow, whatever they need to do on a Bitcoin ETF. These are things we've been asking for as market participants for 7 years.
Yeah, well, think about it, Matt.
7 years.
If I go directional and go buy Bitcoin, I can't buy a protective put. But if I go long directional on one of these ETF, if I wanted to, right? I got all of the option strategies in the entire world.
And it's even further than that, though, because what have we been using for as market participants, because people that didn't want to go either direct access to Bitcoin through a crypto exchange or didn't want to go direct access to the futures market.
I mean, what I've been doing the last year is I've been playing the miners.
Coinbase, the miners. But again, think about GDX versus GLD. They don't move in, they move in the same wave, but they don't move one-to-one with one another. And when you deal with the miners, you got to deal with their earnings reports. You got to deal with individual stock stories that impact.
You have to deal with secondary offerings.
100%. When you deal with an ETF that is futures driven, you only have to deal with the underlying. And so
the correlation
is so much better.
The correlation between the ETFs and the Bitcoin futures, it's not going to be one for one, but it is going to be really, 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 really high. So if you're looking for correlated trading movement, we have tools now, right?
Well, and again, just think about it for a second. You've had a lot of great price appreciation in Bitcoin recently, right? A lot of great, pounding the table from 40 to 65. You're dealing with some volatility. A lot of traders like, oh, where are we going to buy? Where are we going to buy? Where are we going to buy? Well, in the past, we'd have to be very hesitant with certain things. Now, well, traders can just come and say, let me go write a 30 delta call option. Let me bring in $2.30 cash flow against a $39 stock. Let me bring in 8% ROI, just to offset. And that's on 56 days. Let's go to 28 days. Let's go that same. Let me bring in $1.60 to offset 39. Like traders will see that and traders will be like, oh, thank you so much. Thank you so much. It will allow traders to stay in transactions longer. It's awesome. I love it.
It is pretty cool.
It is pretty cool. It is pretty cool. You know what is not cool? The gold chart. Will you give me some, let's flash through a few commodities right now before we move into individual stock chart. It's not the worst chart mankind ever created. What do we need here? What do we need here to get excited?
Honestly, Mark, it's a choppy, volatile, crazy reversal. It's just you have a bullish read on it to a certain extent, but then you're like, did you see what Jay Powell said when it tested at 1800? Like 2 minutes later, he's like,
he did not like those algos.
But you can't own it anymore. We're good. No, it's crazy volatile, and again, I do think a close above 1800 is extremely telling here. I think reclaiming the 200-day moving average can be telling, but we were here last time. We tested last time too. So it's volatile. I think there's a lot better short-term opportunity in the market than gold, honestly.
Right. Yeah. Crude oil still holding the 9. Frank, give me a moment.
By the way, very quickly, just let me finish one thought on gold. Again, the longer gold stabilizes, though, the analysis, again, remember the whole crude oil going up and energy, that's the same type of philosophical situation happening here. Gold is solidifying itself. It is volatile, but it is solidifying itself. Support levels are increasing. We're hitting up against resistance levels. But again, I do think coming back to the GDX and the gold miners, those underlying commodities, look at that V shape, look at that high base, look at that get gobbled, catching up against the 200. I think GDX is actually the play here more than gold.
Right. Talk to me about crude oil. It has been holding the 9 forever.
It's been living up there.
At least, 20, 25 sessions. What do you do? Because it's forming, once again, remove the ticker symbol. You're a momentum trader. You're a proud momentum trader.
Yep, that's who I am.
We're dealing with a momentum stock. How do you play chart setups like this?
You get in on that break. You look for it to take this little 3-day pause that it took at the top, and you say, wow, you know what? We keep bouncing off the 9. Unless I'm intraday, that's been pretty difficult to trade off of the 9, though, right? Because it's just happening very, very quickly. We get this break, look for that next move to the upside. Easy for me, at least from an entry point of view. The stop loss, I always when the 9's my friend, I always want the 9 to stay being my friend, right? So I would want to go basically below today's low and that 9 EMA. But as soon as this breaks this 3-day top, I would call that a tradable signal. Whether or not risk to reward was there, or I wanted to trade it, that would be another conversation. But the entry signal itself would be legit, in my opinion.
And Matt, will you go back to the daily chart? I saw the outline of a box. I saw some, I know your boxes. You
get nervous in my boxes, don't you?
Well, dude, listen, I respect resistance, right? I respect resistance, and it's a long time ago, right? It's been more than a minute since we hit this.
It's been more than a minute.
This level, but why do you have a line there?
Old resistance, a lot of chop here, right in that 87.5 level. But again, I think this is a journey to 90, personally. So my box just represents a slight resistance level that could be concerning at 87. But the question for someone like a Coach Frank is, if you are concerned with 87, you still have reward to risk from 84 to 87.
Oh yeah, absolutely.
So no swing trade would be impacted based on that 86, 87 price target. So I think you're looking at analysis here that high base on the daily, tested against the 9. I think the intraday, though, can be a little bit telling here, as you're seeing a little bit of build-in support on the intraday. You see the volatility here dings both at 80, 75. You got multiple support levels on top of that. But you see that support building intraday, putting pressure against that 84 breakout. I do think it's got to reclaim 83.96 and thus 84. But
agreed.
Yeah, I'm with Frank on it. I think it's a high base breakout scenario. And a swing trade, I'd be targeting 87 to 90.
Pretty chart, has been a pretty chart. What is not, you always got to respect resistance. Let's just go to copper before we get into stock talk. Yeah, that big run up in copper last week came up against a known resistance area and got slapped down. What's the probable outcome in the coming weeks on copper here?
I think buyers are going to be looking with very keen interest right around that 4.4 level, right where the 20-day moving average is. You also have old supports, old resistance between 4.4 and that 4.42 level as well. I got this forming a traditional bullish retracement, looking at stabilization from a retracement perspective, coming in north of that 20-day moving average right there in that 4.4 to 4.42 range.
Agreed. Right. Yeah. And I think you're looking very open-mindedly to playing into that pullback.
Oh, I think traders are excited about it, because
I think you should be.
You lifted off the reversal, but where'd you go into? Smack dab to the previous old resistance level. You were overextended coming into the old resistance level. You tried to form a little bit of a choppy high base. Didn't work out. Came back down. You got this as a bullish retracement. And I do think buyers will be looking at that 4.4 to 4.42 level as entry point levels.
All right, let's transition to the stock talk before we get into earnings. Number one stock on all message boards today, and it is not close. It is just everybody's talking about it. DWAC. All right, so break down the technical pattern for me here, Frank.
Have fun.
Well, you got a little momentum, but you're seeing a turn of momentum on this candle here today.
Hold on, I'm going to get you a 1 minute chart on this.
Matt and I did this. We went into the 1 minute chart so we could find an entry, because we had to wonder if we had to be concerned about that wick at the top. Interesting price movement, but you're not. Listen, if you're buying this, that's it's its own thing, right? It's not the same as the trading that I do. And I wish you the best if you are buying it, but you're gonna have to do it without me.
Yeah, no, I mean, listen, if you don't know what DWAC is, it is a SPAC that Donald Trump, former president, is using to launch his social media business. And without getting into all the details, that's what it is, going public via the SPAC process. And boy, listen, I thought SPACs had some good movement back in January and December, where SPAC would come out and it would go from 10 to 20 or 22, and you're all excited, right? I just like DWAC said, hold my beer. We're going to show you how, a SPAC really lives.
Oh, it definitely reminds me of GameStop in January.
It does. And needless to say, bringing it up because everyone's talking about it, but needless to say, I mean, any trading after 2 days of movement,
let's just call it what it is, guys. This ain't traders.
This isn't
traders. It's the same thing. This is emotion. This isn't traders. There's no probability. There's no edge. Traders have edges. There's no edge here. You could call this Donald Trump's specialty company. You could call it anything you wanted. I don't care what the symbol is. I don't care what the name is. I don't care what the company is. I don't care who's responsible for it. There's no trade here until you start to see how markets behave around certain levels. Right now, it's impressive. Like you got to be impressed. You're talking about a SPAC 2 days ago that was at 10. It dinged 175 on the overnight. You got to be like impressed by that. But again, there's not an edge here yet. The options, we don't even have options yet. Let's give it a little bit of time. That's all I'm saying. Let's just give it a little bit of time. Treat it as a recent IPO to where you want further evidence to how the market behaves around certain price points. Then you can start doing price projections. Right now it's the casino and it's the Wild West, and you're going to let the volatility subside a little bit, in my opinion.
As Tim would say, it's a popcorn chart. If you want, it's entertaining to watch. Get
very
popcorn.
Entertaining.
But listen, the last thing I'm going to do is go and give away 3 months of profits, taking a wild ride, hoping to do that. Call me old fashioned, right? Call me old fashioned.
Well, it's just one of those scenarios that, I mean, you buy today, you could wake up, it's at 160 on Monday or it's at 20 on Monday.
Like, I mean, like
it's
seriously,
just one of those scenarios.
There are so many directions it can go, but eventually, it definitely went on my watch list, as the weeks pass, see how it develops.
I was interested in getting your take. You're kind of a SPAC guy. You like SPACs in general. Is this one of those that you're going to be tracking over time?
100%.
Yeah, I figured
because the uniqueness of it, right?
It's different. It's different.
I love unique trading ticker symbols because there's oftentimes not market correlation. They trade to the beat of their own drum. And like whether it goes to 160 or 20 or whatever during, and there could be some wide range candles, right? We know that's a guarantee. This is, maybe not this wide a range, but, we're not done with wide range candles on this. No. Because President Trump is the backdrop of it, it's going to maintain interest. It is going to maintain interest, and I imagine you'll have an option chain soon.
Over under. Bitcoin had it in a day. In a day, Bitcoin had it. The ETF.
I know.
Recent IPOs have had it within 2 days.
I would guess Monday.
Next week. Yeah, early next week.
I would guess Monday if I had
too much interest here for the market.
Too much interest.
Not to price in 400% volatility options.
Yeah, no, I mean, because and I'll be honest, like if there were an option chain today, I probably could get premium at 1250. And I'd take some spec back.
No, you could probably get like a 10 delta at 1050.
No, I mean, I could probably get some good premium, and this is something it's the type of thing I normally play in different things. So
it'll be
it's
interesting.
going to watch this.
Well, keep us posted on it. It's not something I don't track a lot of SPACs, not my kind of thing. But keep us posted on if you see any opportunities.
It is. Listen, and I told this story in the lounge this morning. I literally was going to buy 100 shares yesterday on spec, but I slept in for the first time in years. Now, granted, I probably would have sold it at 22, being the cheap guy I am.
I can't confirm all of this. Mark came into the pre-meeting yesterday. He's like, dude, I was gonna buy DWAC today, and I'm like, oh, you were? He's like, yeah, and it was already at like 30 or something like that. He's like, I can't now. I'm like, no, you can't. It's already ran.
I probably would have bought at 14 and sold at 22 and been like, and then woke up the next day and been like,
Dude, but you take your gift, but yeah, keep us posted on if you see anything.
Listen, but it's not the only interesting thing. I mean, we've had some interesting earning reports, and I don't know how you don't start with Snapchat.
Well, why would I start with Snapchat when I can talk about how garbage Intel is?
It's just because
Okay, I'll start with Snapchat.
But the pretext to all this, listen, and I got to share a stat with you, Matt, that I brought up and I wanted to share. Bloomberg didn't start tracking this until 2017. And this is before I got this stat before the Intel and the Snapchat. So they started tracking what quarters get punished the most on stock market misses. And they did this in 2017. This quarter so far has had the biggest punishments of any quarter on misses since Bloomberg started tracking this in 2017.
Listen, and what did we say at the very beginning of earnings season? Literally, how many times did I say it?
You've said it
You
numerous
gotta
times.
start with a beat and a beat here. Like if you don't, you're running the risk of the market turning on you.
Like the market, while bullish, if you ain't performing, you are getting punished hard. And we're seeing that in Intel, we're seeing that in Snapchat.
Well,
and it's something to be aware of on trades through earnings, through
Well,
strategies. Like
honestly, though, when you look at Intel's report here, and we'll start with Intel because we were talking about them, but when you look at Intel's report here today, mega giant in the semiconductor space, they actually had a very decent raw number report. They came out at $1.71. The expectation was $1.11, so a really good beat on EPS numbers. Revenue came in above the expectation at 19.2 versus 18.2. That represented 4.7% increase year over year. So what's the problem here? Well, the problem is they cited every concern you could cite regarding anything that somebody in the market, and there's 8 billion of us out there in the world right now, any concern that you could have cited, Intel cited today. They cited supply chain disruption. They cited margin problems. They cited increased competition coming into their space. And all of this resulted in a decrease in guidance from 102 EPS next quarter down to 90 cents. This was from if you read or listened to any of their conference call and paid attention to the guidance, this was an obvious sell. And it's unfortunate given the fact that Intel did produce this quarter, but man, next quarter looks like it could be fairly ugly for Intel, and the market's pricing it in very aggressively here today. But again, when you lower guidance and you cite every concern that anybody in the market is currently concerned about, the market's going to punish you, and that's exactly what happened with Intel.
Happened on Snapchat too.
Well, and the problem for Intel, it gapped down, ran down, and there's not a lot of major support underneath $50. And so when you're looking at those major support levels, they really don't start building until you get into the 43 to 45 levels.
And I have played Intel at 42, 43 several times in the last 3 years.
Honestly,
and it looks like
you might be playing it again. You might be playing it again because this is one of those gaps that, again, gap down, run down, violate support level. There's nothing really there to hold your hat on. This thing could, you never know with the market, obviously, but my projection would certainly be down coming in to test those support levels.
Indeed. Snapchat.
Let's take a look at Snapchat.
Snapchat's sell-off makes, it's a double the Intel percentage sell-off. I mean, that's a DWAC candle coming to you soon on the weekly chart.
That's another gap down, sell down, catastrophic type gap scenario here on Snapchat. And again, let's start with raw numbers. EPS actually came in above the expectation, 17 cents against the 8-cent expectation. Revenue a little bit mixed. It depends on if you're using GAAP earnings or non-GAAP earnings. 111 versus 107. But in reality, it is a miss on revenue. So you got to beat on EPS. You got to miss on revenue. Revenue did go up 57.3% year over year, but nobody's talking about that because everybody and their dog today is talking about how Snapchat missed on revenue, how Snapchat lowered guidance, and why did they miss on revenue? Why did they lower guidance? Why did the advertisers not come back to Snapchat? Well, Apple changed their privacy policy coming into this year, guys, and Snapchat and the social media companies have been warning in recent earnings reports that is going to have an impact on their revenue streams. That impact was bigger than the market expected. The market immediately prices that in. You see the sell down, you see the gap down, sell down. It wasn't just the lowered guidance. You're talking about revenue growth in the fourth quarter. Now, once again, this is the fourth quarter, holiday sell season. Very important quarter for a company like Snapchat. They lowered their advertising growth from 59% expectation down to a paltry 20%. That's a big time lowering of advertising growth as well. So a lowering of their EPS growth, a lowering of their revenue streams, the impact that Apple's new privacy policy is having on these social media companies is real. It is showing a real impact in their fundamentals, and the market is puking up as a response. It's not over yet. Snapchat lowered their guidance for the fourth quarter big time. The gap down, sell down, volatility increases. This thing has to stabilize. This looks like a catastrophic gap for me. That typically leads to downward pressure in price. Where could that come into? I think you're looking at $50 here. I think you're looking at $50. You're currently at 56. You do have major support over here at 56, or excuse me, right around that $50 barrier right over here. But again, you'd be talking about reversal analysis. You'd be talking about time. You'd be talking about the entire communication space solidifying itself. And even if communication solidifies itself, are you really looking at Snapchat following this disastrous of a guidance report? I have my doubts. I have my strong concerns here. This looks like a stay away.
No, and the thing about it, I dove into this as well. And one of the apologists of Snapchat, they were saying, listen, this is a deal. This is a great company. I mean, it is now at this thing, it's only 18 times revenue next year.
Yeah, I would like to understand what they mean by deal. Like, I truly would like to understand that.
I was just like, listen, and I talked about this morning in the lounge just briefly, but I was just like, lower price does not mean that it's a great value still.
That's what I was just going to say. Simply because you thought it was a good price at 75 and now it's 55 doesn't mean it has value.
Like,
value
18 times revenue is still really pricey.
And I want to be clear on something. Value has nothing to do with technical analysis.
Yeah, so
no,
I think you got both working against you on this. Schlumberger, did you get those numbers?
Oh, of course I got Schlumberger's numbers. You name it, I probably got it here today. Except probably the next one. That's how it works, Frank. He's going to say something. It's Mark. I should not have said that to Mark.
I'm looking on my
I should
phone
not have
digging,
said that to Mark. I knew it was a mistake. If it was Tim, I'd be like, yeah, I'm good. Tim's not going to try to one-up me. Mark, he's going to try to trick me. But I did get Schlumberger's numbers here. Schlumberger, by the way, Schlumberger was the second company I ever traded in my life back in 2005, I believe.
Oh, nice.
First Solar was the first company I ever traded. But Schlumberger here came out how do you get boring? Here's how you get boring. 36 cents was the expectation. They came in at 36 cents. 5.9 billion was the expectation. They came in at 5.8. Revenue went up 11.2%. I'm a little bit appreciative's not the word. Impressed that it didn't go down, honestly.
No, I actually sold I had shares that I held in earnings. I sold this morning because I was like, that's not a great, it was like, oh my gosh, it wasn't panic, right? But it's like, I was like, I expected more.
Yeah, so did I. So did I. I'm a little surprised. I would have felt like, because Kinder Morgan came out with a fairly similar report, and Kinder Morgan got demolished on that. Well, demolished, but they got beat up pretty good on that one. Like the bullish retracement on that, by the way. But Schlumberger came out, lukewarm report here, Mark. Probably going to take a little bit of time to navigate that, but again, I still think you're looking at that resistance trigger on Schlumberger and saying, if we do break back above that, you can reestablish the position. I don't mind your decision though. I don't.
I was just like, this is, make money, take profits. I'm a big believer in taking profits, and especially if your fundamental case is
and honestly, if you would have came down to 32, I think 32 is a buy here. So let it work itself out.
There's a huge difference on all that. But you know what wasn't a boring earnings report is old Cleveland Cliffs.
No, now you're talking about some bad. Now you're talking.
Let's talk about some good.
Let's talk about dirty, sexy money here. Now that's my type of language here. This thing has been a cash flow
monster.
Cleveland Cliffs pounding the table, showing still dynamics. What's up here today? Cleveland Cliffs came out with a very impressive 233 against the 223. Revenue came in strong at 6 billion versus the 5.7. The revenue number though exploded, guys. But again, I just want to say this. I said it was still dynamics. I said it with Nucor. I'll say it with Cleveland Cliffs. Everybody say it with me. When revenue and still explodes 264 4.8% year over year. That's only transitory.
Yeah.
That's
and another thing Cleveland Cliffs did in their thing is they have so much free cash flow. They said that they are using their free cash flow to buy back all of the preferred shares, which it basically equates to about a 10% stock buyback.
Wow.
That's big time. That's big time. You got to love it, Mark. You got to love the report. A beat on EPS, a beat on revenue. Revenue number explodes year over year. Buyback announcement from a preferred share. That's obviously been one of the biggest catalysts for stock appreciation on any company over the last 10 years. You got to love the news coming out. Cleveland Cliffs pounding the table and also leading the sector at this point. The reversal in the sector is still navigating itself. The two stocks that are kind of solidifying themselves, though, Cleveland Cliffs confirming the reversal on a positive catalyst, and then Still Dynamics, Tackle 25 darling, still kissing against a potential 65 breakout channel, which I like as well. So keep an eye on those on those specific two charts. Cleveland Cliffs with the momentum behind it, Still Dynamics lagging it, but with a good trigger above 65.
No, I mean, that positive thing. I mean, Cleveland Cliffs, that's 2 quarters in a row where it's just like, oh, behave yourself on that earnings. Just really, really good. Schlumberger, why couldn't you give me one of those? Another good report coming out, favorable market reaction. I want to take your analysis if it's justified. American Express, AXP.
AXP, financial darling credit company, AXP here, fighting against a resistance level at 180. AXP comes out and says, you know what? We don't care about your 180 resistance level because we're going to report 227 against an expectation of 178. We're going to beat on the revenue as well. The expectation was 10.5. We came in at 10.9. And we're going to grow at 24.9%. That's what American Express said today. And the trader said, thank you. We're good above 180.
Honeywell,
and financial companies do not report guidance.
No, and I mean, quality chart. Frank, from a momentum standpoint, you get these gap ups, right? We see these all the time. It's very common. This is not an uncommon pattern.
No, not at all.
And so this is a pretty common pattern where you get some consolidation, you break out above to all-time highs. We see this all the time, all the time. So, give me a couple ways that an individual that might be interested in playing it could play it.
All right. Well, option A, probably the easiest way to roll it is just bar by bar it. In above today's high, stop loss below today's low. Kind of the default textbook momentum play, right? Problem with that play is a lot of times your risk to reward is just not going to exist because it's a long ways away. So that is probably the biggest issue with that. Option 2, still look to play the momentum entry. Hey, let's take out today's high on Monday and let's go into our favorite intraday time frame. In my case, it would be the hourly, and look to build basically something around that hourly 9 AMA, that momentum moving average. That's the one that I say is the momentum moving average. You don't have to agree with it, but whatever yours is where the stop loss placement would go. That's going to give me a little easier go on the risk to reward at the expense of getting stopped out, right? So that's going to be a problem. My favorite way to do it is get the 2 or 3 bar dance. Let's get an inside candle testing resistance on Monday and ideally Tuesday, and then break out from that. I'm trying to think, Schwab, SCHW, really kind of fit into that as a really good example of how we can look to let that development happen. Has the big pop on earnings, beautiful breakout last week. Impossible to want to go bar by bar and the stop. And generally, I'm not a huge fan of starting the trade intraday on the stop loss, but just getting those couple of days followed by the break, that's something I think we can very much look towards. And of course, the more traditional flag where maybe we get that little angular dip as that 9 rises and then kind of play the flag itself. So there's definitely going to be ways. I think patience is key. And sometimes patience, like SCHW, it was like 2 days and it was ready to roll.
Yeah.
Sometimes it's months, right? Or weeks at least. But I do think there are ways. And if we are interested, and I think it's fine that we are, right? The right names are going to do that for us. I don't think it's a bad idea to kind of identify the way you'd like to see it develop and look to build something off of that.
Well, and just to kind of piggyback on that, the setup Frank was talking about, where you're buy bar, you already had it. It's the intraday dance you're seeing at the top end of the range, then you break out and you run. That's the momentum Frank talks about. But I love what Frank said about the inside candle, and when you see this positive response to earnings, I like dancing the harami here. I like waiting for that inside candle, really type stability you like to see from an intraday. I'm not a chaser. It never have been, never will be. I like the market to come back to me a little bit. And so I'd like to see a little stabilization on that chart, inside candle, dance the harami, and then and I thought your Charles Schwab example, Frankie, was a very good example when you're looking at that, because you had a strong response on earnings, maybe not AXP strong, but it was very similar. Mm-hmm. It was very, very similar, very strong, very breakout, top end of the range. Well, what happens here on the intraday is you start to build. Following day, you get that inside candle. You dance the harami, right? You dance the harami there, and then you pound the table. That's the secondary technical pattern that I really like following news-based events. And so when you're talking about an economic report, you have the initial reaction, then you have that secondary reaction. Love the secondary reaction, because the initial reaction, man, a lot of times it's just algorithms and pre-planned institutional stuff. I want to see those traders come in. I want to see that build over time a little bit, and dancing the harami, going inside candle, waiting for that secondary technical trigger on secondary technical setup following the event. I think that's the best way to play it.
Two more for you, Matt. Honeywell?
Of course. Honeywell. Industrial giant. Market's got it wrong here today, by the way, on Honeywell. Honeywell comes out with 457 versus 410. Revenue came in at 15.3 versus 14 point. Excuse me, I was going on the wrong numbers. I do have Honeywell though. I was going off HCA. Give me a second. Honeywell comes in at 202 versus 201. Revenue came in line for the most part at 8.5 to 8.7 billion. That represented 8.7 increase in revenue year over year. This to me needs to be, if there ever needed to be a doji, and that's where my market got it wrong comment, because the market's got down. If there ever needed to be a doji, this is a doji candle. They did some weird stuff on their earnings revisions, not revisions, but on their guidance. They actually saw revisions of EPS guidance upwards while they simultaneously decreased revisions of revenue guidance, but both of them were in the historical ranges. It was a weird one. And that's why I said doji this, because it was a little bit of an increase, a little bit of a decrease. EPS, think about that for a second. On their guidance, little increase, little decrease. On their raw numbers, slight beat on EPS, slight miss on revenue. That screams a doji to me. But market got it as a sell coming down, still in reversal analysis for Honeywell.
Listen, and I will give you, I don't expect. Simple Goods Food Company, SMPL. I'll give you $100 if you have them off the top of your head right now.
You want me to get SPL off the top?
SMPL.
You want me to get SMPL off the top of my head?
No.
Is that what you want? Is that what you want? I can do that. SMPL came in at 29 cents versus the expectation of 26 cents. Revenue came in slightly above the expectation of 259 to 255 million. Now, from
that's
a
professional talking right now who's pulling crap out of
guidance perspective, they also came in line. They were expected guidance of 137 EPS. They reaffirmed that at 137. Revenue was within the range. This is a lukewarm earnings report out of Simple Goods Company. A little bit of good, a little bit of bad, but nothing really to hold your hat on.
Listen, let's go talk about some charts.
Wait a second. I want to talk about the $100.
Listen, I am impressed, though, that you were able to do it that fast.
Oh.
That was a professional talking right there, because he didn't have any of that information.
Are we all just assuming I didn't have those numbers?
Yes, we are 100% assuming.
Are we 100% certain?
Listen, Tim's already swearing at me that we're going over. But listen, it is not a Friday show. If we do not close it,
you forgot though. Hold on. You forgot a couple.
Well,
Did.
I forgot Seagate. Nobody cares about Seagate.
Do they care about cheap burritos?
You know,
CMG, Mark's like, I'd eat at McDonald's and not Chipotle. CMG, I'll do a quick check.
So what is the most overpriced valued burrito company in the world doing today on earnings?
They're not making enough money.
No.
Simple, not making enough money. Still stay away a little bit. So we'll stick on that one. Last one though, HCA, very quickly. Mark, I want to talk about HCA as it navigates that weekly breakout. I want to get Frank's take on it. 457 versus 410 on HCA. Really good post there. 15.3 versus 14.3. Really good post on revenue. Increase in guidance here. So we got an official beat, and a beat. That's a hat trick here on HCA. Frankie?
Second quarter in a row, right? They killed it last time too.
Frankie? Last quarter. Consolidation. Earnings.
Oh, yeah.
Boom. This quarter. Consolidation. Earnings. Threaten that breakout. Frankie, are you as excited at a potential 260 breakout?
Yeah, I am. I tried unsuccessfully on the breakout after last earnings, and nothing that happened on this chart. We probably talked about it on the show. On that break itself, that led me to believe that that 290 to 300 range was where we were ultimately heading. And while we spent the whole quarter doing nothing, we didn't do anything wrong either. We held support. We never broke any trend or anything along those lines.
Well,
we just didn't go up.
Just like in the healthcare did. HCA stabilized. Healthcare itself actually came down pretty aggressively.
So and so maybe that was a bit of a part. I still believe that the target price in the 290 to 300 range, based off of that last movement and their history, is very much on the table. So I am absolutely interested in the breakout, or at least as a potential breakout candidate here. 100% on my watch list.
Gotcha.
That's a sneaky chart. It's a
sneaky quality chart on HCA.
That is a sneaky quality chart right there.
Well, that's why I wanted to end on HCA. I just wanted to quickly get HCA because they were one of the better reports today.
Yeah, and if you remember, I know you probably do, Mandy, because that report last quarter was awesome. Just huge, and so hard not to. All right, let's see here. Let's see what you have for us.
Let's see what you're working with, HCA.
Let's see what you're working with on Frank's charts. I'm going to step away a couple minutes.
All right.
I'll be right back.
Frankie.
Sounds good. All right.
I love, by the way, Frankie, awesome job on your latest Frank's chart on Twitter. Team Tackle. If you haven't had a chance, make sure to give Frank some love over there on the Tackle Trading Twitter account. Frankie, what's your first stock your mind?
Let's start with them. I talked about Dick's Sporting Goods yesterday on yesterday's Frank's charts. Why don't we start with them? And you can always find that on Thursdays over on the Tackle Trading Twitter. Come over and hang out with us.
Yeah, go ahead. Give us your breakdown on DKS.
So these guys, again, they were one that had that great earnings report and had that momentum, right? That post earnings momentum, and then it turned its life around. What I liked about these guys is that dip ended up basically filling that gap, right? Filling that gap ultimately from, early September till early October, rallying up off of that. If you look at these guys on that weekly, this is almost a textbook bullish retracement type of candidate, right? On that weekly chart, pull back into that rising 20. They've responded favorably off of that before. Nice follow through candle here on that weekly. I like the fact that we paused at the 50-day moving average, and that's where we saw some of those early profit takers. That makes sense to me. I would have, I wasn't the guy buying at the bottom, but if I were, I'd like to think that probably would have been me, at least scaling out at that 50-day moving average. I like that we have created a higher low in the form of that Wednesday low, confirmed through upward movement over the last two candlesticks that are now trying to push us back above that 50-day moving average. We've got a while. These guys are late November for earnings, so we've got some time. I like these guys. If we can break that 50, I like their chances of filling up that first level of space into that 137. And if we can win that fight, well, those highs aren't that far off. So I felt it was very nicely developed pattern over time. It definitely took some time to develop, but I do like the development that I'm seeing.
Well, and I also think you got to like, as that daily chart has shown that consistent downtrend, You're starting to see reversal analysis come in at that gap fill. Really like that. This weekly chart is something to behold, though.
It's something, isn't it?
It like I don't want to paint too positive of a picture here, but I love the momentum. I love the consistency. I love the double bottom that is happening. I love the reversal potential. And this is a company that can literally fly.
Yeah.
Literally fly. You gotta like the potential. It's on my radar as well. It's choppy. That daily chart's choppy.
Daily is choppy.
You're not going to find a lot of cleanliness at the bottom of charts. They're
No, I
going
mean,
to
things
be
have
choppy until they clear themselves up.
So exactly, and that's just the nature of the beast, right?
Yeah, I do like the weekly chart though on Diggs.
Yeah,
that is just a pretty development setting up, isn't it?
Well,
Holy cow!
And just pro tip, guys, whenever you're looking at a short-term downtrend, but the backdrop is a primary uptrend, you got to look at that weekly chart, because those are typically bullish retracements on the weekly chart, and those are when those buyers start to really come back in.
It can really help. Yeah, it can really help.
I can promise you, if that confirms on Monday, I'm going to get a spread on. Like nothing crazy, right?
Yeah, I think it's a really good candidate for a
get a nice longer term bull call spread, something that maybe even an out of the money one, something give me good risk reward.
Well, and we said earlier today, don't bet against the consumer. You're seeing discretionary solidify itself and become one of the most consistent areas of the market, especially following, as that run up into Tesla and whatnot. Here's old Dick's Sporting Goods, man, trying its best to aid that new development happening in discretionary. I like it. I like the potential.
I like that a lot too.
Yeah, that's that's almost a textbook weekly, right? I mean,
it is
so pretty.
Well, and the volatility was similar on the up and the down. Like it's consistent. Anybody talking knows consistency plays such a role in technical analysis.
For sure. Yeah.
That smells like money on a Friday.
Yeah, I was a big fan. I'm glad other folks are seeing it that same way. Always, as a technician, you always want people to be on your side and certainly not know you're wrong, right?
No, I mean, listen, and I don't do spreads very often, but this seems like a perfect spread candidate.
Well, I really like this resistance level getting violated as it gets back up above the resistance channel as well. So you're seeing multiple prongs of confirmation. Number one, you're breaking up above the intraday. Number two, you're fighting against the 50-day. Mark talks about confirmation. That's a close above the 50-day. And then you're also breaking back up above the trend line that's been fairly consistent. It does check some boxes here, Frankie.
Yeah, it's got lots of check marks, which is what you always like to see, right? Get rid of the bears, get rid of the other side's arguments as best you can.
Hey, that's what I like. Literally, day one law school. That's what they teach you.
Yeah, it was a good lesson.
Know your opponent's argument more than your own.
So, yep, absolutely, and good solid advice. What about FCX? I'm liking FCX as a breakout candidate post earnings.
Go ahead. I'm with you.
This one's fairly straightforward in the sense of we've got a window here, right? If we can break through, and we do need to probably take out the highs of this week to get that confirmation. In doing so, I think it'd be difficult to want to play a dip on this one. I think this is breakout or bust for me. But if we can take out these highs, I like our chances of working back up into those $44, 44 and change, somewhere between 44 and 45 resistance level. I mean, we got a pretty clear path in a space that's heating up, an area that I like at least. And I'm definitely interested in a breakout here on FCX. I know you are. What would you add to that?
I think the quality of the breakout is what really stands out here. And when you're talking about major breakouts, it's like connecting the dots.
Yep.
Right. And the more dots you can connect, the stronger the resistance level is. And so you're connecting dots at this level. And specifically, I'm not saying a zone, I'm saying a level of 39.20. You can connect those dots at 39.20 that go back all the way back to February. Okay. Ding, 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 ding. It's like a slot machine at a casino every single time. Down a little bit, down a little bit, down a little bit. Well, again, the longer the base, the higher in space really kind of rings to me here that Coach Tyler loves to say. I love the high base scenario that is establishing itself. Again, market overextended following a reversal. Now you consolidate, you get a little, you see the 90 MA catch up to it. It's choppy. It's supposed to be choppy as you fight through resistance. The hope and the want and the desire and the analysis is it cleans itself up as you break out of that 39.20 level. And so when you're looking at this on an intraday perspective, no, I do not care about the wickety wick stuff because that's all overnight action. I'm looking at these levels at 39.20. You see that break up above that clears up a lot of this chop here. You couple that on a daily time frame, you said, yeah, I like that daily pivot that's breaking up against the high base. You pull that out to a longer time frame, you're like, ooh, that's a right shoulder breakout. That's a king's bed. However you want to categorize it, that looks like a wonderful breakout. That 45 makes minimum sense at 45. And so I think you're looking at this on multiple time frames. Day traders are liking it above 39. Swing traders are liking it above 39. The position traders are liking it above 39. And I don't know if you can hear my dog Rosie, but my dog Rosie also likes it above 39.
If Rosie's on board, I'm on board. You got me sold.
I don't know if you heard my dog, but
I did.
Oh, we heard your dog.
Okay, I just wanted to make sure.
I
was saying 39, and Rosie's like, yeah, 39. Let's go. Stop talking.
You're just glad it was an actual dog and not in your head. And I respect that.
I wanted to make sure. I was like, is that just me who heard my? Okay, no, we're good. But no, Frank, yeah, literally 39 stands out. 39.20 a little bit from a wickety wick perspective. But obviously couple it with your copper analysis on HG, seeing a little bit of a retracement here, coming in here, seeing that navigate that little bit of retracement. I kind of have a feeling that copper is going to find support fairly similar to when FCX breaks out, and I'm going to like them both a lot.
I'm with you. Mark, anything you'd add?
Dude, I'm still building this spread trade on Dick's Sporting Goods.
All right, I respect it.
You can get some nice trade that. I'm excited. Listen, for FCX for me, man, that breakdown from it depends on what copper does for me here. If I can get a bullish signal like that pullback, doji at this breakout level.
All right, let me paint you a scenario then.
I need to get a signal on copper before I do anything on FCX.
You're going to get a good one soon, so get ready because you're going to get one. Whether or not it confirms or not is a different story. But you're looking at a momentum short-term trend with a bullish retracement. If you're a swing trader, these are charts you live on. They just are. You live on these charts. And so you're going to get that opportunity. It's just a matter of if it confirms. And if it does confirm, whether that's support at 4.4 or 4.2, I really don't care where that support builds on copper. FCX being at the high, maintaining the high base. If copper finds support, yeah, I think we're going to test Tyler's theory of higher in space.
Agreed.
Tyler's theory on higher in space. Yeah, we'll see that. I mean, that's definitely watch list without a doubt.
Yeah, it's a good theory. All right, so we all know how strong finance has been, right?
Yeah.
Regional banks in particular. I think KRE is one way that we could look at that space. But what I was looking at, Maddie, was FITB. They had their earnings. I mean, this is again let it develop post earnings. Had a good response, breaking into all-time highs on their earnings. Have had that 3-day dance, right? The high, and then that consolidation as that 9 catches us up, high base type of a thing. I think I do like the idea of getting exposure personally to the regional banks, whether it's through FITB, CRE, another stock, my favorite one, whatever it might be.
Yeah.
The area's been strong. I like FITB because to me, and maybe it's just, what I want to have happen, but it feels to me like this is going to be one of those that if the space continues to remain strong, which I would expect at least short term to do so, not too long down the road, I'm going to be saying, what do you do at 50, Maddie? Do you take profits? So I think a working
good problem to have, though, right?
Exactly. Hopefully we do have that problem. And so FITB kind of stood out to me because of the risk to reward. There is, 50 is, a ways away. It probably isn't going to happen overnight, but it gives me lots of options from a stop loss point of view. Gives me an opportunity to not even worry about, I don't want to play this particular break. Say we get it Monday, I can look for that next trade within that window. So I like FitB as a candidate within that space. How would you, kind of maybe score FitB versus maybe the ETF as a whole?
Well, when we take a look at XLF, you have XLF as a momentum build that is taking on a little bit of personality in and of itself, getting a little bit overextended, but you gotta really like the momentum build that is happening in the financial sector in general. When you're talking about Goldman Sachs, I was going to do a mass whiteboard yesterday. I just got too busy. I am going to do a mass whiteboard, but and the whole thing was when to front run. And Goldman Sachs was going to be the example of when to front run. You got a flag-based pattern coming into a major breakout, and so you are seeing some positive things develop in the financial space. And I don't want to say we're through earnings in finance, but we're pretty much through earnings in finance.
Well,
you threw all the major ones last week. You had a bunch of regional ones this week, and so you're kind of seeing how the market has behaved around earnings. And it does look like it's positive. Then when you come into those regional banks and you look at KRE, multiple time frame breakout here on KRE, breaking back up against the resistance level right there around 71.5 to 72. You got this as a snapback test yesterday and a confirmation here today. So you certainly got to like it. And KRE is absolutely an appropriate vehicle to play those regional banks, especially if you're wanting to take advantage of a little bit of the price appreciation here. When you're taking a look at FitB, and FitB was Coach Tim's pick from Trade Masters this previous week. You gotta like the current momentum. You gotta like the pattern. It's broken out of its short-term and intermediate resistance levels. It's outperforming the actual ETF itself, which means it's front-running the behavior. And the post-earnings analysis you gave earlier today on a couple of the stocks kind of fits with what we've been talking about with FitB, not chasing the momentum, waiting for that Harami dance. And that's what we did over the last 2 days. Couple inside candles showing a little bit of consolidation. You're looking at refirming up that potential trigger right there at above 45.62. I don't really care about that wickety wick from yesterday, given the fact that today kind of confirmed that 45.65 level from an intraday perspective. And so, yeah, Frankie, I do think if you had to rank, whether FitB, KRE, or the financial sector itself, I think you're looking at the financial sector being momentum based. You're not looking for any new trades there. You're just looking for continuation analysis. KRE forming some type of new trade, multiple time frame breakout. But once again, FitB outperforming all of them before and after. I like the intraday movement following a very positive earnings. I would side with you and Coach Tim on FitB over KRE.
Mark, anything you'd add?
I mean, listen, I want exposure to financials. I don't care what form. Give me pretty charts. Give me triggers. I want exposure to financials.
I respect it. Yeah, I think you want to at least be open to that for sure right now.
It's
maybe
the sector that's doing a little bit better this week. The momentum.
It's a very, and you don't know the future, but it doesn't seem like there's any great reason to think it's going to stop on Monday morning either, right? So,
I'm not that guy.
No, that's not who I am.
I'm not the contrarian trader.
So I want to throw this one to Mark first, and I want to throw Halliburton at you, Mark.
Okay.
HAL. So a couple interesting things on HAL. I thought we broke out, right? Then we had earnings. We've pulled back and we're testing that 9 EMA, which is also the breakout point, right? So we've got a couple. I mean, that's a very interesting price point to me. And at least as of today, we are holding up nicely on these guys. We are, however, doing the battle at the 200 weekly. And so when I first looked at these guys, I thought, you know what, I'm kind of interested in this pullback because I just found, as I was scanning, that placement on the daily chart stood out to me. It's, wow, okay, I'll test the Cody special post earnings, right, in an area that I'm interested in. But then when I went to the weekly chart, I quickly said, you know what, I'm going to let somebody braver than me play that pullback. Give me the break of that weekly 200. We have a big window of opportunity on these guys. I mean, there's really nothing that stands out to me until we get into 32, right? There's we've
I
been
agree.
here
32.
I mean, there's a number everywhere between here and there, right? But a pretty clean window. I would really like to see it. If it didn't have the 200 sitting kind of right on top of us, I'd be very interested in the pullback. Personal rule, you have to get through that 200. And so I would want to see the breakout, which would give me that. Multiple timeframes would line up really nicely with some space to go as we work through this upcoming quarter. So that's where I am with Halliburton. What are you seeing? Did I talk you into it?
No, I mean, I know how I play these situations. I sell naked puts above the rising 9 weekly.
Sure.
And cash flow it. And then you have to give the 200 weekly a break. Now, because this is a pattern that I love, because it usually is involving a reversal, right? And it's usually involving a longer term reversal, and so you catch a few of these. You don't have to bat 100% of these. You catch a few of these, you can get some big price appreciation from a position trade standpoint. I love when it gives me 2, 3, 4 weeks. Give me some time to cook in this situation. The longer it cooks, the more interested I am in playing that break. The longer it cooks, the more interested I am in playing that break. And it's a good one.
So for sure. Matty, anything you'd add? I got 2 for Matt that I want his take on. Then I'll see. Tim's not here to stop me. I'm just gonna keep going.
Dude, we'll go until we're done.
One more, Frankie.
I'm not.
One more, Frankie.
That means I get 2.
I'm with you here, Frankie. The dip here is not consistent. It's choppy. That's a stay away from me. It cleans itself up with the breakout here, and the breakout, it also coupled that with the 200 weekly. Yeah, I do see some momentum that can build on top of that, and it certainly is interesting.
So, all right, Matt, I'm gonna rapid fire a couple to you as we get wrapping up here. 2, snow. Everybody's favorite Canadian rapper, right?
Of course.
A 90s reference for sure.
Is that debatable?
Yes, ask Coach.
Okay. His opinion is not valid here.
So these guys just broke out, consolidated, right? Really not done too much, kind of basing up there at that 9. Basically thinking follow through, take out this, these highs, work our way to, that one test at 360 for the first target. Because, I mean, there's just nothing here. I mean, that's not that big of a deal. It just is something, right?
Very clean, though, Frankie.
And
very
just
clean.
Nice, clean little breakout. This area has been great. And I don't expect, this chart, when I look at this chart, I think, well, why aren't these guys, pushing into the 400? I know that's, more than a couple days away, but I like the space that we have to work with. And then AFRM.
Well, let's stay on snow very quickly.
All right. Yeah, sure.
Liz, I like to get the complete analysis out there.
I respect it.
A couple things to like here. Number one, high base pattern on the daily chart. That certainly looks very, very attractive. The intraday, though, really stands out to me as it navigates that high base. Remember on Halliburton, it was choppy. Up and down, up and down, up and down, up and down. Well, here on Snowflake, you got an increasing support level and you got a picture perfect horizontal resistance right there at 345. That is a simple trigger above 345, which confirms the intraday as well as the daily chart. Let's go back out a little bit of time frame. Go to the daily chart here. You look at that. You like the build. It's a clean resistance level. It gets clean all the way to 360. You took the words out of my mouth. Stood out to me as well. Above 360, you don't got chop until 400, bro.
Yeah, I mean, you've got lots of clean air above you, right? A lot of
clean between 360 and 400. Yeah, I like this. I like this trade.
Yeah, I think that one makes a lot of sense. And what about AFRM? These guys are something new to my personal radar. They, had IPO'd back in January. Recently broke out of that IPO.
When's earnings?
Right. I think they are.
We got time.
Yeah, I think all of these have time. I did my preliminary check. Very similar to snow in the sense of, we recently broke out in this particular case of kind of the highs post IPO or spinoff or whatever the heck they did there, holding up pretty nicely. Maybe a little more choppy than snow, but certainly less choppy than Hal.
Definitely.
Right?
It's
In the
again,
middle.
yeah, we're Goldilocks. This is Mother Bear, right?
Yeah,
This is
yep.
good.
It's okay to be the middle child, I
Yeah.
hear.
Oh wait, Mother Bear was too cold, right?
Yes, I
Man, I
think
haven't
so.
had little kids for a long time. My kids are getting older, so yeah. Okay, we're back with Goldilocks
We're
again.
back with the Goldilocks.
Yeah,
So again, just another breakout candidate here on these
yeah.
guys. I mean, a lot of air above them. They've been hot, right? There's really no disputing.
Again, I say it, I say it, I say it, I say it, I say it again, but the cleanliness and consistency of that resistance channel on the intraday just tells you so much
Yep.
about who is controlling this price action. I like the 160 trigger here on a firm holdings, and the 160, a close above 160, nice price appreciation. You look at this on a weekly chart. We're overextended. We're above any type of price. Was this this was an IPO,
Yeah, it must
right?
have been the
Yeah,
IPO.
it must
Yeah,
be IPO
I don't
price.
think it was a spin-off.
No, it wasn't a spinoff. You're looking at that as just an overextended weekly scenario, but that weekly chart's been overextended for quite some time. High bases have been good triggers. Saw one right there. Quick journey to 160. Nice trigger against 160. Probably not a lot of technical targets up there, Frankie. I'd
Yep.
say 170 makes some sense, though.
Yeah, I mean, I was kind of looking at 180 as a secondary target,
Yeah,
and
listen,
then what you're doing in between here and there is,
the chart feels like $10 to $20 movement. So
yeah, I would
T1
agree.
at T1 at 10, T2 at 20. I think it
Yeah,
makes sense.
yeah, that's kind of where my head
Yeah.
was. And then just last one, just because I think it's an interesting chart. Maybe Mark will like this one, and that's Darling DAR, working our way into a
Oh,
long-term resistance
multiple
level.
time frame break here type scenario, Frankie.
Exactly.
What they say, weekly charts that break 80 go to 100.
We do.
Oh, okay. Let's make it a saying.
Let's make it official.
Yeah. Well, if it's the daily from 90 to 100, the weekly from 80 to 100 makes sense. No,
Makes
I
sense.
like the break here. This is a multiple time frame break. The only question is earnings is coming up.
Yep. And so this
Yeah.
might be more of a radar. We
Mhm.
might not have time, especially if we don't like break immediately. And it's
Well,
almost like this chart, you'd want it to cook at least a week, right, Mandy, without earnings being a
Yeah.
factor. So this one might be one to put on that
Oh, but
radar and see how it looks after
wow.
earnings.
It's okay to wait a little bit. Look what that can do when it wants to fly.
Oh yeah, it can move.
So
It can definitely
keep an
shake.
eye on it.
So,
I
all right.
agree.
Well, I know I got to wrap up, but hopefully gives you guys some interesting things to add to your watch list for the
Awesome
upcoming
job,
week.
Frankie. Awesome job. And as always, guys, if you like Frank's charts and you enjoy Frank's charts, go over there to Tackle Trading's Twitter account. Give him a nice little subscribe on Tackle Trading's Twitter account. Frank controls that, and he puts out every Thursday a nice little 2-minute video on his pick of the day on Frank's charts.
By the way, do you know how hard it is to go through all the technicals in 2 minutes? If you're me, at least, I never get the first cut. I get the first cut. I'm like, that was good. And then I go listen to it.
I have no clue what you're talking about. We don't average 90 minutes on the halftime report.
Not at all. Not at all.
Not ever. I'm not long-winded at all. What are you talking about?
It's hard.
Listen, if we go 3 more minutes, we'll be starting hour 3. We might as well just
third
wait.
hour. This is a radio show. Let's
Third
go.
hour.
Let's do it.
Coming up in
halftime
hour
report.
number 3, we're going to be covering earnings reports.
If
We
we
will
wait
be
long enough,
breaking
Tim will just show
DWAC
back up.
down on the 10-second chart to see
Listen,
if there's any momentum building.
sometimes on a Friday, we like to hang out.
Sometimes
I
we
got
do.
no problem.
It's been
with
a good
that at
week.
all. I got no problem with that at all. But I am hungry, so let us wrap that up. Matt, final thoughts for the crew heading into a weekend.
Guys, been a good week in the market with all, just coming in, analyzing it every day. Market's been price appreciation, but again, fun times in the market do have a tendency to, come back down to earth a little bit. And so we are fighting against resistance right now. We could see some consolidation, but the market is solidifying itself and confidence is building. And we're starting to look for secondary patterns following bullish uptrends, which is also always a funner environment than when you're in bearish times and reversal times. Those are a lot of concern. Now we get into real type leg analysis. If we can navigate this resistance pivot cleanly, consistently, I've been saying it. Santa Claus might be coming. So we'll see. Stay with us every day as we break down the markets with our community.
Listen,
Team
all I
Tackle
know-
and I don't even know. Like, did we hit 20K on the subscriber?
We did,
We
I believe,
did.
Tackle
yesterday.
Trading, just very quickly, Tackle Trading, you guys are the best. We love you guys so much. And we're going to do a webinar on Monday on trading options with the great Tyler Craig, who's going to be doing a basic tackle trading 101 course on Monday for our YouTube channel as a thank you. And then over the holiday season, I'll be doing more tackle trading 101s as we get this great message of tackle trading out to more people as well. Team Tackle, you guys are the best. Love you guys. Have an absolutely fantastic weekend. But the weekend is not where we take our time to relax. Let's get our reports done. Let's go through those reports. Let's get our week dialed in for next week. When that starts with the scouting reports, the tackle trading newsletter tomorrow as well. So pros, you know the drill out there so far. And for the pro members, if you haven't checked out the Tackle Trading Discord channel, give us an email, team at Tackle Trading, and we'll get you the Discord info so you can participate in the Tackle Trading Discord. Up and over there, I control the mastermind group for the STEP system. Mark does his cash flow Vikings. Tyler and Emily do their trading labs. Coach Tim has a coaching thread over there as well for coaching students. And so the more participation we get over there in Discord, the funner that's going to be as well. So definitely check out Tackle Trading's Discord for the pro members. And we're going to be doing more and more of that. And I had the pleasure of hanging out with a bunch of pros during Trade Masters, watching Coach Tim do an amazing job with his picks on FitB, his pick on, oh man, that Snapchat volatility trade was a thing of beauty here today from Coach Tim. So I'm going to be doing that every week with the pros over there at Tackle Trading's Discord as well. So come check it out. Come have some fun with us.
All right. Frank, any last thoughts?
How do I top that? We'll see you guys next week. Make sure you stay on top of earnings. Be ready for those reports. Great job. It's almost ironic that today is the day that Tim really should have showed up so we could have sung the praises of his Snapchat, and he's not
I
here.
know.
Monday, it was water under the bridge. We won't bring it up ever
It was
again.
an earnings play. We don't remember it falling 2 more days. Like, it's over. Like,
Listen,
he doesn't get credit anymore.
And my final thoughts is I don't know if Santa Claus rally is coming or not. As a bull, I hope so. But I do know I'm going to get some Christmas shopping done because I keep hearing about supply chain issues. I want to get my kids what they want for Christmas.
Snapchat warned of supply chain disruptions today. Snapchat, mind you.
If
Put those two
Snapchat
and
is
two
having,
together.
listen, I just listen, and I am a last second Christmas shopper. I'm getting my Christmas shopping done earlier this year. I'm not going to let supply chain ruin my kids' Christmas. But everyone, have a wonderful, wonderful weekend. We'll be back with Monday, but be sure to check